This conference will now be recorded.
All right, and so today is February 19th, 2025. Welcome to the Client Support Monthly webinar. All right, I'm going to make a couple announcements here, and then Gene, if you have anything you want to say, feel free to. First of all, we changed the client support meetings now. They're all in the afternoon. They start at 4 p.m. my time. What is that? 3 p.m. California time, I guess. Trying to think. I think that's about
3 p.m. Pacific time.
Pacific
only
time,
because Arizona is a little confusing.
I know. Well, we don't change our clocks, that type of thing. But all right, so that's when they're going to be, and they're going to now be on the third Wednesday of each month. So we're going to do these once a month. We were doing them once a week, and the turnout wasn't really worth it for the turnout. So we wanted to make it kind of one time. People were losing track, not necessarily tuning in all the time. So we kind of just want to make it once a month so it's easy for people to remember. And it's on the third Wednesday of each month at 3 p.m. Pacific time. I don't know why we're still using Pacific time, even though we're
because Arizona time is confusing.
Broadcasting from Arizona, but okay. Anyway. All right. So, Gene, you got anything you want to add?
Well, I just want to welcome everybody and thank you for joining. And just for fun, attendee number 2. Hi, Gene and Bennett. Who is that? Well, I guess they're not answering. James, are you still there?
That's
yes,
Graham. That's Graham.
Is that Graham? Hi there, Graham. Okay, good. So the new format is a different situation. So just to fill everybody in, again, Bennett mentioned once a month on the third Wednesday of every month at 3 p.m. Pacific time. But the nice thing is, I don't know if you all remember, but this link will never expire. So remember with GoToWebinar, I used to have to send you a new link every
year.
Yeah, so we don't have to do that anymore. And also with this, Graham and James and all you fellas and gals out there, you can chime in and chat. And I think also too, Bennett, just since James happens to be here, might be fun for you to talk a little bit about what you've been doing with the futures, and maybe James can share what he's doing, because that's a fun topic. All right, so I'm gonna mute out and take it away.
Okay, the other thing too, just to add on, these sessions are still going to be about 30 minutes long. And if you have any specific questions, hey, feel free to ask. And you can type them in the chat, but you can also turn on your mic as well. So just make sure, we don't talk over each other. But the mic is definitely kind of a fun thing to do. All right, well, let me just quickly run through the fun administrational things that we're required to run through. And of course, that is telling you about the risks involved in trading the financial markets. Like I always say, without that risk, there is no opportunity. So the two really do go hand in hand. Just be aware of the risk. Trade with money you can afford to risk, called risk capital. And when you take a trade, good idea to know what the risk is going into the trade. That way, if it doesn't work out as expected, you're not caught by surprise on the amount of loss. So always be able to control that. I got a couple of books I'll show you in just a minute on risk control that would help you with that. Also, too, if we uncover anything of interest here that you want to act on, please run that by your financial advisor, as I don't know your personal situation, and they certainly should. Also, too, past performance does not guarantee future performance. So there's no guarantees. We deal around with probabilities. All right, so a couple books on risk control, money management for traders, and a trader's money management system are available for you if you need help in that area. The Art of Trading, my new book, this is the second edition, not the first edition, but the second edition is now out. You can get that at Amazon, and I'll put the links in the recording at the bottom, or you can just go to our website, or just go to Amazon and type in my name, or type in The Art of Trading, and that should come up. So those are available for you. And then finally, of course, we also offer software. We have charting software, scanners, and risk control software. Most people that attend here have at least some form of that. All right, that is done. Okay, so let me come out of here.
Ben and Gene, I just wanted to congratulate you on the new edition of that book. Jerry's bought a copy already. He says it's
Great.
about twice as thick as the old one, and
Yes,
it looks like it's fantastic. So
Oh,
congratulations.
thank you.
thank you so much.
Yeah, I hope you enjoy it. Yeah, it's basically, I put a lot of material into it. The publisher was going crazy. He's like, this is too thick. But in any case, I wanted to really be a comprehensive, almost like a brain dump of what I've learned in trading the markets over the last 30 years, and also to include some new factors since, of course, we came out with some additional software since the last book. So I know it's kind of a thick one, but it's I hope it's a good read. Put it that way.
Also, too, Ben, just a couple of little thoughts for everybody since you're all clients. I'll be emailing out to everybody the supplemental material because, as Ben said, it's 608 pages, but actually we have 200 pages that are on a supplemental website. And that's for the, all the software has new users manuals. So that's all posted on the Wiley website. So I'm going to email that out to you in the next day or so.
Yeah, and we didn't want to put that into the book, so we created this separate area that you can go to grab that because not everybody has the software. But all right, so so what do you want to cover today, guys? Anything specific?
Yeah.
How about, do you guys like to day trade? Do you position trade? What do you think?
Hey, James, how about you tell us what you're doing currently with the futures, and then Ben can share with you what he's doing because he's doing some really exciting thing.
Let me go to the futures here.
Yeah, great. Of course, as you know, Ben, I'll want to hear about your impression of gold and Bitcoin later on. But
okay. Yes.
Futures.
All right. I also cover that, James, every Friday if you can make it.
Okay, great.
Detailed report. That's our service that we call Stock Analysis Friday. So,
great.
I like to cover Bitcoin and the market for a little bit on that.
And James, do you ever look at the recording? That's on YouTube?
That's true, too.
I have not been looking at that, but now that you've clued me in, I will go back to that. Yeah.
Groovy.
Yeah. So that way, if you can't make it, you can check that out. And so what I do on a weekly basis is, there's a lot of people that, have stocks they want me to look up. But in the beginning, before I get started, I usually cover the market overall, just a quick analysis, and also Bitcoin. So I'll even interest you. All right. So, I trade actively the NASDAQ. I also trade the ES contract. And I usually trade it through Apex prop funding. And some of the things that for prop funding you need to know, you need to actually be pretty good at scalping because they have a trailing drawdown situation. And for trend traders, what happens is you can have a move up, a pullback, and then another move back to the upside. And the problem with that in a prop firm is that can affect your trailing drawdown in a negative way. So scalping is a great way to go, but you really have to be good at it. What you want to have is at least a 70% win rate on it with at least a 1-to-1 risk to reward. And I usually come in around 80% with a 1-to-1. I don't do a 1-to-2 when I scalp. I usually do a 1-to-1. And it's a very specific setup. I'm not trying to trade a lot, but I wait for my particular setup and I go. My screen, I do have the art software here, but probably what I'm looking for is just a quick couple of bars before I'm basically out of the trade. And so I found what works really well for that. There's a couple of things, but a change of momentum, if you can capture that really quickly. We cover that in our day trading room, what we do for that. What you see on my chart here are fair value gaps. That's these things. And there's lots of software out there that offer that. And fair value gaps are areas that act kind of like magnets of support and resistance. And you get usually some type of response, short-term response, when you start hitting those bands that you see on the chart. And when you hit the bands and you're also in a outer Bollinger Band area, that increases the probability of the trade. And so, you know, you have to formulate your own style, your own comfort level of how you want to trade the markets. Day trading can be a very emotional roller coaster. There's a lot of times when I'll take a trade, my stop gets put in automatically, and then from there, what happens is all I do is, right, Jeannie, I walk away, and then come back after the trade's completed, because sometimes I don't want to mess with the trade. In other words, my stop is in a definitive area, my profit taking is in a definitive area, and the price bars as they move up and down, you want to make sure that you're not, you know, kind of getting sucked in and destroying the trade, so to speak. So you kind of want to keep your emotions out. And if you feel yourself, you know, having a hard time doing that, step away. As long as you got your target to stop in, try not to mess with it, that type of thing. So those are some of the lessons I've learned in trading, day trading. But it really all comes down to, you know, having an edge, exploiting the edge. And if you're not prop trading, then you don't have to worry about the trailing drawdown stuff. You can even trend trade the intraday trends. But my suggestion is if you are prop trading, try to go for the scalps, and you'll do just fine. So that's kind of, you know, what you're looking at here. James, talk to me. How are you doing? Have you been day trading at all? What are you doing?
Yeah, pretty much every day, mostly in sim accounts.
Okay.
So what I've been trading is, well, what we've been learning together. I get together with Jerry and Grayson and Podrick to kind of do a post-mortem on the day's trading. But during the day, what I'm essentially doing is trend trading pullbacks with momentum. So identify a trend, identify a pullback, usually to the 8 or a 10 moving average, and then a continuation. But the continuation has to have some indication of momentum to give that additional edge. So that's either reading bar to bar and seeing an extension away from the pullback, or some enhancement of volume, or we've also got buy sell imbalance. So we're looking at those things to see as indicators of momentum. And then the other thing which Frosty taught us long ago was, you know, stay out of the chop and just go in areas where you do have, say, 200 or more points of volatility. And once you see that, then you can, since volatility tends to congregate together. If you see one direction of a 200-point move, then you can anticipate, you know, the other direction of another 150 plus move, and that's good enough to, because in futures trading, or in any trading really, you're trying to get the middle of the move. So those are some of the ideas that we're working with.
Yeah, I love that. I love the fact that you're very detailed about it. Whenever I ask somebody what do they do, it's if they're detailed like it, I know they're actually doing it.
Yeah.
But yeah, I kind of like that, to say the least. There are so many different ways you can approach and trade the markets. The only thing that really matters is if you have an edge. That's it.
Yep.
Okay.
Right.
And I try not to get you know, bossy or tell people to do it this way or that way. Instead, I like to hear what they're doing, take a look at it, because you know, if you can pick up something from somebody that you can add, that's fine. But if you have an edge, then just trade it, and then the next biggest battle you'll have is your emotions, dealing with your emotions, because I don't care how good you are in trading, If you get tilted, which means getting angry, or you get stopped out by one tick, sometimes that can be infuriating. And if you feel that kind of emotion coming into your trading, it's probably best to step away for a bit and let that dissipate.
Right. You can definitely see the pattern from, the novice traders to people who've been doing it for a while. And the novice traders are kind of the hitting the buttons like a maniac, 3 trades within one bar. And then
Yeah,
and then
that's
once you get
true.
to once you get to know what to stay away from, then you tend to trade less
Yeah,
later on. So yeah, it's
yeah.
much more
It
productive.
only takes a couple trades a day.
Yeah.
That's all it takes. And I'll tell you, the funny thing is, if you are with a prop firm and they let you copy your trades over to multiple accounts, you can make. Let's say you make on 2 trades. Let's say you do 3 trades. You have 2 that win and 2 that are losing trades. If you can walk away with 150 or $200 on a quick scalp, but multiply that over 10 or 20 accounts, you're done for the day.
Right. And I know some people who like to do those duplicate accounts because if they were putting $1,000 on the line on one account, it might make them nervous. But if they're only putting $10 on the line and they're duplicating it in multiple accounts, somehow it's easier emotionally.
Well, that's right. And also, too, for example, with Apex, I have a lot of funded accounts there, but I don't trade them all in one lump sum. I'll split them up a little bit. And
Uh-huh.
that way it controls the risk. If I happen to have a problem that day or make a mistake or something where my risk is nowhere near what it should be or normally is, then I don't blow out all 20 accounts. You're only hurting a set number. So it's probably a good idea to have groups of 5 when you trade. And that way, if you do have some type of problem, and it may not be something you did, it could be something you just, accidentally did a buy or sell. It may not be anything wrong with your edge. You just make a mechanical mistake. It doesn't affect all 20 accounts. So I like to do that. I like to do it in that process. But you literally can do really well money wise if it all starts with an edge. You got to have the edge.
Yeah. Yeah, that's
All,
right. Just
all this
having
stuff
an edge.
sounds good but if you don't have an edge, it's that's all it is.
Yeah, once you get an edge and can be consistent, then and if you want to increase your monetary reward, you just amplify the number of contracts you put on. But you
Right.
have to have that edge, and you have to be consistent.
Now, anybody else out there do any day trading? It's
I
definitely
think
not.
Alexander just joined us. So
Oh,
Alexander says he's
Alexander.
he's in the room. He's in the
Alexander,
house.
you are a prop trader, I
Hi,
think, too.
Bennett. How are you doing?
Good. How are you doing?
Oh, I'm good. Good. Took the
Good. Everything going okay?
mm, yeah, I took the medical day off today. I'm back to work, so that's why
Okay.
I've been joining for a few
You
months.
feeling
But
okay?
yeah, yeah, I'm fine. Yeah,
Okay,
good.
good.
Yeah.
How's Evelyn doing?
Yeah,
Oh, all's good. All's good. Yeah,
good.
everything's good. Yeah, but I'm just,
Well, good to
haven't
hear.
joined you in a while, so today's a good day to
Good.
and
So,
listen to you.
Alexander, just so you know, and since quite a few other people have come in to the room since we started, these client supports we're going to do them once a month on the third. Normally, it's going to be on the third Wednesday of each month, same time.
Oh,
So
okay, okay.
we're going to do
I'll
3
I'll
p.m.
keep that in mind. Yeah,
Pacific time. Okay. So
okay.
just know it's every third Wednesday of each month. And the link you use today is going to be the
Mm-hmm.
same link you can use all the time.
Okay. All right. Sounds good.
You don't have
Sounds
to
good.
worry about getting sent a new link. The only thing you gotta know is the times, okay? And I think
All right.
Jeannie will send you out an email anyway, but
Okay.
just write that down. Everybody needs to write that down just so they know when it is. Um,
Okay.
Now, Alexander, you're doing prop trading, aren't you?
I was until I haven't done it in a few months because I got to I get back to my real job, so I haven't
Well,
done it.
nothing wrong with that. But let me tell you, as long as you're not too tired at night, the markets are open at night. I do a lot of trading between like 10 and 1 o'clock at night too.
Yeah, yeah. I should, I should start doing it. I have about like 7 Apex funded accounts. So
Oh, you should be doing those. You should practice with those at night
yeah, yeah, I know,
if
I
you
know.
enjoy it, because you won't have as much range as you do during the day. It's like your range. I think your average true range at nights. I'm going to just say right around 4 to 6. So it's not like it is during the New York hours during the day, of course, when the range is like 15 to 20. But the thing is that just adjust your trade size so your P&L can be the same as if it was during the market, and then of course your parameters for take profit need to be adjusted a little bit as well. But the bottom line is, you get some pretty big moves. Um, in those evening hours. I mean, it will stay dormant for a while, and then it breaks out pretty good. So there is some money to be made at night. You have to be patient, probably even more patient than you do during the day. But that's a possibility for those that are working.
Bennett, what's the best time at night to trade the futures?
Well, that's a good question. There's some usually fairly good trends between 5 and I'll say 7. Then it kind of gets a little quiet until about, I'm going to say, and not every day is the same, okay? But then it gets a little quiet probably until about 11, okay? And then from 11 to 1, usually there's one big trend that happens then. But every day is a little different, of course, but you usually get a trend early in the evening.
And your audio is a little bit wonky.
Mine is?
Now it's fine.
Okay. But usually you get kind of some type of trend between 5 and 7, and then again a little later at
That's
night.
5 to 7 Pacific.
Well, that's a good question. 5 to 7 my time, so it's Arizona. That's going to be an hour earlier for you.
Okay, so
Again,
it's about
wonky.
6 to 8 Pacific then. Okay.
Okay. Gene says my audio is no good. Can you guys hear me?
It's better again now.
Okay. I might have been a little far away from it.
Okay. So when you say 5 to 7, it's mountain time, right? You're in Arizona, right?
Yeah, I guess they call that mountain time.
Yeah, so 4 to 8. Yeah, four to
We
six
don't
then.
change our
Yeah.
clocks here, so I don't know what they call it.
Yeah,
But
yeah. Okay.
Just
Yeah.
one
but
Okay.
anyway,
contract.
I'll try that. And like
but
Bennett, on Sundays when the futures market opens
yes.
in the afternoon, there's quite a bit of volatility also. Is that
Yeah,
correct?
that's okay.
Okay.
Yeah, I mean, I'm not telling you to only show up during those hours, but
Hmm.
um, yeah, because you never really know when it's going to. Every day is a little different, but that's kind of what I have felt is probably the usual occurrence at some point during
Okay.
those time frames.
Now, what is the best what's your favorite instrument? Is it the ES or is it like
Well, you
the
can do either the
Nasdaq?
ES or the Nasdaq. I think at night you're better off doing the full contract. Okay. I even like to do the full contract now during the day because as long as you have an edge and you have your stop automatically set along with the entry, then you're set. You're okay because your loss is going to be maintained properly. So, yeah, I think you can go the full contract. Now, if that makes you feel uncomfortable, you can go and to the micro. Gene calls that the training wheels. Um,
Mm.
you can go to
Ah,
micro level, but eventually you're going to want to go to the full contract, and the main reason for that is the damn commissions.
Uh-huh.
Okay,
Yeah. Hmm.
and at night you need enough trade size because your only moves are going to be probably 5 points, 3 to 6 points maybe. So you know, at night, unless the thing really trends and you're scalping, you're not going to have that much profit potential. So you can't go with a small trade size, and you don't need to. All right, because you know you're going to be using a stop anyway, and your stop's going to be set on the lower ATR at night anyway. So you know, you can go the full contract.
I might just throw in one caution about when you're trading overnight. There's fewer traders. There's going to be more slippage. So definitely try it out on sim until you're really comfortable with that.
You know, I haven't
dynamic.
had that. I have
Oh
not.
yeah.
No, not on the NQ or the ES. Maybe during certain times it could be true, but so far, usually when I've taken a trade, it seems to be moving a little bit. Maybe the volume's up during that move that I don't have any slippage.
Well, once in a while, I'll get a little bloop that will go right down and take out the stop,
Really? Yeah.
or give me a bad fill.
Gotcha. Gotcha. Are you hardwired or wireless?
Yeah, I'm hardwired.
Okay, good. Because I've heard that with people that are wireless, that can happen. But yeah, I mean, I guess it could happen because it depends. There are some times when it's kind of quiet, but usually it's not going anywhere, so I'm not really in it. I'm not sure. But yeah, good point. Good point. So I don't know, Alexander. I would recommend, you know, giving it a shot and see. I mean, it's, you know, it's a prop account, so it's not like you're losing real money. Okay. You guys hear me?
Yep, loud and clear.
Okay. I didn't hear from Alexander. Wasn't sure. Alexander, I don't know if your mic's still working or not, but I'm not hearing you anyway. Might have stepped away though.
Yeah, me either. How about Brad? Is Brad here?
Brad, are you here? I don't think he is.
And I see Graham. So if anyone else has questions, we'd love to hear them.
Yeah. Yeah, we're trying to run these about a half an hour, and I don't need to be talking the whole time because really it's more. This is about you, not me, and it's about questions that you may have.
Can you, Bennett? Can you tell us more about those value areas? That's something that I haven't worked with too much.
You mean the fair value gaps?
Yeah, fair value gaps. Yeah, thank you.
Well, the fair value gaps are areas that you can actually see on the chart, but I got software that also kind of shows me where they are. And notice, let's just talk about this one right here for beginning. Okay, I'll circle that. And basically what that is representing is the gap between this price bar and this one. See how there's no wicks in between? Can you see that?
Yes.
Okay, that's a gap. That's called a fair value gap. Okay, and so basically what that means is this gap down, there's a whole bunch of orders that probably didn't get filled in this area. So usually what happens is the market and more the institutions tend to want to go up and grab those orders. And usually at that particular point, this is a bearish gap because it formed in between bearish price bars. So usually it acts like a magnet. And what happens is these orders get filled here and the market makers may even run some liquidity. But the bottom line is they act like support. Okay. And so it comes up here. And usually that is an area where people will buy, and you'll see the range over here, this gray area here is your market profile. And so this is where a lot of orders get done here and represents, fair value. But in a situation where it drops down, comes back up, it's usually a great place to get short again. All right, so people use that. Now, the way I use it is I look for prices to come up to it, and then I look for rejection off it. When I see the rejection, then chances are we're probably going to move down for a little bit. And I'm only going to be in there for maybe 3 or 4 price bars. I usually get out when I get to the middle of a Bollinger Band right here. When I have a fair value gap on the outer side of a Bollinger Band, that's a very strong signal, accompanied with the owl going towards red. I'm usually good for 8 to 10 points at that point during the New York hours. At night, it's more like 6 points. Notice we had one up here, same type of thing. You had actually a different colored one. And this software here is looking not only at the current time frame, but at multiple time frames. So it goes out and looks at different time frames for me. And there may be gaps on different time frames that aren't necessarily apparent on the chart I'm currently looking, but it's nice because then I don't have to have a bunch of charts open. So this software will identify it. And so when you get up to areas like this, what you want to see is rejection off those areas. Sometimes a market, if it doesn't reject here but continues to go up, this will then become support and not resistance. So you have to see what kind of rejection you get off that. And usually when you get a large wick rejection like that, all right, especially above a liquidity level like right here, then that's really a sign of manipulation. And at that particular point, you should have a fairly significant move down, at least to the middle of the Bollinger Band. And of course, that's where I'm out right there. So that type of thing, I kind of like for day trading. You could use it for position trading as well. It's not trend trading though, okay? So big distinction there. You're not trend trading doing that. So if you're a trend trader, there's many times where you'll use a system like this and you'll get a small part of a trend, but the edge should be, around 80%, if not better. So it really shouldn't matter because you're not going for a huge 2-to-1 risk to reward. You're usually going for at least a 1-to-1, and on a system that's above 50%, that'll be profitable. So you got to see what kind of trading fits your style, but that's what those are. Hopefully that's enough.
Yes, great explanation. Thank you. So it's kind of like if you talk about auction theory,
Yeah,
people were holding up their cards during that time and they were skipped over, so the
that's
auctioneer will
right.
come back to them later.
That's exactly a good way of putting it. That's an
Great,
excellent way of putting it.
Thanks.
And then you want to see how price reacts when it goes up there.
Right. Trade what you see, not what you think. Yep.
Right. And then the thing is that also too is what I've found with these fair value gaps is when they occur, also when they hit the band and it's in the upper area of the Bollinger Band, that's usually a high probability trade in the opposite direction.
Right. So that would be coinciding indicators sort of thing.
Right.
That's great. Yep.
Okay. And any trade, the interesting thing is, the problem with it that people can have is you're always counter trend trading to some degree because the trend is up. You're looking to short this. And so technically you're counter trending this trend up here. Okay.
Right.
Which did break structure. So you have to have a stop. The stops needs to be 3 or 4 points above at least the band. In case the band becomes not resistance but support, and the trend continues. Okay, so you don't want to be betting against the trend. You want to be just scalping the reversal off that, and not go against the trend if it returns quickly.
Got it. Perfect, Ben. Thank you.
Yeah, sure. Here's one. You had one here too, and sometimes when the market's trending, these are okay to take, but notice it's in the middle of the band. It still did what it was supposed to do, but these are a lot less. These don't have quite the probability as the ones if you wait for it occurring at the edge of the Bollinger Band.
Makes sense. Thanks.
Okay, sure. All right, well, I guess that's it for today. But good session, and thank you everybody for coming. So the next one's going to be next month on the third Wednesday of that month. That's correct, right, Gene?
Yes, that is correct. The exact date is going to be March 19th, Wednesday at 3 p.m. Pacific.
There you go.
I
All
gotta
right,
tell you,
good.
I love this format.
Well, it's nice to hear everybody's voice. It's nice to
Yes,
talk, you know.
and learn stuff.
Yep, yep. All right.
Congratulations again on the new edition. Everybody go out and buy it.
Yes, indeed.
I didn't pay him to say that.
The Art
Thank
of
you.
Trading, second edition.
Thanks.
And give us
Did
a
you get it?
review. We'd
Did
love
you
to
get
get
it on
reviews.
Amazon? I'm sorry. Go ahead, Gene.
Oh, I was just saying, feel free to give us a review. We love hearing feedback and all that.
Yeah. James, did you get it on Amazon?
Yes, Amazon.
Okay, great. And they shipped it real quick in the whole 9 yards?
All good.
Okay, good. Good. All right, cool. Because that's where most people get it, I think. All right, great. Well, thanks, everybody. We'll see you next month, okay? Have a good one.
Thanks, Ben and Gene.
Okay.
Have a good one.
Thanks,
Yeah, thank you
James.
for coming, James. Thank you.
You
Thank
bet.
you,
Bye-bye.
Alexander. Thanks, everybody, for being here.
Bye, everybody. Have a great night.